Are you tired of watching Toronto home prices drop by over 3% while mortgage rates remain stubbornly high, leaving you paralyzed between fear and FOMO? Well, I just analyzed the latest May 2025 Toronto Real Estate Board data, and what I discovered will completely change how you think about buying, selling, or investing in this market. I'm about to share strategies that could literally save you six figures or help you profit while everyone else is sitting on the sidelines. Stay with me because this gets good. Let's start with the numbers that matter, and they're more dramatic than most people realize. The average home price in Toronto proper is now $1,009,400 as of April 2025. That's down 5.4% year over year. But here's what's really telling. The sales to new listings ratio has dropped to just 30%, which means we have significantly more supply than demand. This is a complete market reversal from the pandemic years. We saw 7,012 homes sold across the GTA, which is down 18% from 2024. But here's the kicker. Homes are sitting on the market for an average of 24 days, and they're selling for 99% of asking price. This tells us we've officially transitioned from a frenzied seller's market to what I call a balanced, buyer-friendly environment. But here's what most people are missing. Fixed mortgage rates have dropped to around 4.1%, down from last year's highs, and the Bank of Canada is signaling further cuts throughout 2025. This creates what I call a perfect storm of opportunity, because as rates continue dropping, buyer demand will surge. But right now, you still have the advantage of reduced competition. Here's something really interesting. Even the rental market is cooling, with average rents down 5% to $2,606 per month. This tells us the entire housing ecosystem is adjusting, creating opportunities across multiple investment strategies. Now, the average days on market increasing from 15 days last year to 24 days this year might not sound like much, but in real estate terms, that's huge. It means buyers have time to think, negotiate, and make informed decisions instead of bidding wars with no conditions. The frequency of bidding wars has dropped dramatically, giving buyers actual negotiating power. Buyer strategies, mastering the high-rate environment. If you're buying right now, listen carefully, because these four strategies will put you ahead of 90% of other buyers in this market. And the data shows buyers have more power than they've had in years. First, get pre-approved with maximum flexibility, but understand the current lending landscape. With mortgage rates at 4.1% and dropping, lenders are being more accommodating, but you still need to work with a mortgage agent who can pivot between A lenders, B lenders, and even private lenders if needed. The key difference now is that you have time for due diligence. No more waiving financing conditions in panic bidding wars. Make sure your approval accounts for potential rate drops throughout 2025, which could increase your buying power significantly. Second, leverage the increased inventory and negotiating power. The sales to new listings ratio at 30% means you're shopping in a buyer's market. This translates to real negotiating power. You can request repairs and negotiate on price. I'm seeing buyers successfully negotiate 2 to 5% below asking price, which was impossible just 2 years ago. Look beyond core Toronto, where satellite cities like Pickering, Milton, and Hamilton are offering 15 to 25% price relief. A 3-bedroom semi in Toronto might cost $1.2 million, while the same property in Durham is $875,000. Third, target motivated sellers strategically. With longer selling times now averaging 24 days, sellers are becoming more flexible. Watch for assignment sales where investors are offloading pre-construction units they can't close on, especially in Liberty Village, Vaughan, and Markham. Also, monitor power of sale listings. These are increasing as some buyers who over-leveraged in 2021 and 2022 face payment challenges. Developers are offering 5 to 10% incentives to move unsold inventory. Fourth, maximize government incentives that are now more valuable than ever in this adjusted market. First-time buyers can get the land transfer tax rebate up to $8,475 in Toronto, but the real game changer is the first home savings account. Save up to $8,000 per year tax-free toward your down payment. For couples, that's $16,000 annually. With prices down 5.4%, your down payment dollars go further while you're building this tax-free savings. Now, if you're selling, the game has completely changed, but smart sellers are still getting premium prices. Here's how. First, price it right and use psychology to your advantage. Stop chasing those inflated 2021 prices. They're gone. But here's a pricing trick most agents won't tell you. List at $899,900 instead of $905,000. Why? Because most buyers search in ranges, and you'll show up in both the up to $900,000 and up to $950,000 search brackets. This simple change can double your online views. Second, win with presentation, because first impressions are everything now. Homes with pre-list inspections, professional staging, and high-quality photos are getting 40% more showings and selling 15 to 20% faster than unstaged homes. But here's what's really working. Digital tours using Matterport or virtual walkthroughs. With so many relocating buyers from other provinces, virtual tours are converting browsers into serious buyers before they even visit Toronto. Third, make it ridiculously easy for buyers to say yes. Provide utility costs, property tax bills, and renovation receipts up front. Buyers are doing more due diligence than ever, so give them everything they need to make a quick decision. If your property is tenanted, have a clear strategy for delivering vacant possession. Uncertainty kills deals in this market. Fourth, understand that today's buyers are risk-averse after seeing friends lose money on purchases made in 2021 and 2022. Offer flexibility with conditions, financing conditions, inspection conditions. Properties with clean records, no liens, and up-to-date taxes are closing 25% more smoothly than properties with complications. Buyers don't want surprises, so transparency is your biggest selling advantage. For investors, this market shift is creating opportunities we haven't seen since 2017. But you need to be strategic about property types and locations because the fundamentals have completely changed. First, focus on cash flow properties, and the good news is they actually exist now. Many condos are still cash flow negative at current rates, costing you $400 to $600 per month out of pocket with 20% down. But here's what's working. Multiplexes and turnkey properties are offering positive cash flow opportunities due to lower purchase prices and reduced competition. Look at duplexes or triplexes in older Toronto neighborhoods like the Danforth, Weston, or parts of East York. These properties can break even or be slightly cash flow positive, especially with house hacking strategies. Second, understand the different property types and their current performance. Toronto offers condos, townhouses, detached homes, and multiplexes, and each has unique risk-return profiles right now. Detached homes have corrected the most, offering better entry points, while condos have held their value better but offer lower cash flow. Multiplexes are the sweet spot for investors because they benefit from economies of scale and multiple income streams. Third, tap into CMHC MLI Select for multifamily properties. This is a game changer most investors don't know about. If you're buying 5 or more units, you can get 95% loan to value with 50-year amortizations and reduced insurance premiums. The eligibility is tied to affordability benchmarks where you keep 25% or more units below median market rent. But this is essentially government-subsidized leverage for rental housing. Fourth, buy where the growth is happening based on three key indicators. Follow transit expansion like the Eglinton Crosstown and Ontario line. Properties within 800 meters of future stations are still undervalued. Monitor zoning changes where Toronto is allowing multiplexes on single-family lots, creating redevelopment opportunities. Focus on immigration hubs in Scarborough, Mississauga, and Vaughan, where rental demand remains strong despite the broader market cooldown. The key is conducting thorough due diligence now that you have time. Review property documents, rental histories, neighborhood trends, and upcoming infrastructure projects. With rental prices down 5% to $2,606 average, there's opportunity to acquire properties at better cap rates while positioning for recovery as the market stabilizes. Look, whether you're buying your first home, selling to upgrade, or building a rental portfolio, this market is rewarding strategy over emotion, and the data proves that patient, informed buyers and investors are winning right now. The biggest mistake I see people making is waiting for the perfect time. Perfect timing doesn't exist, but proper positioning does. We have a unique window where prices are down 5.4%, inventory is up significantly with that 30%, sales to new listings ratio, interest rates are dropping from 4.1% and expected to go lower, and negotiating power has returned to buyers for the first time in years. Toronto's long-term fundamentals remain rock solid. Immigration, job growth, and housing supply constraints aren't changing. What we're seeing is a market adjustment, not a collapse. And smart money is positioning now while others are paralyzed by uncertainty. I've taken everything I just shared, the current market data, buyer negotiation strategies, seller positioning tactics, and investor opportunities, plus neighborhood watch lists, investment analysis spreadsheets, and complete action checklists, and compiled it all into my comprehensive Toronto Real Estate Survival Guide 2025. This isn't some generic PDF filled with outdated information. It's a complete action plan with tools you can use immediately, whether you're planning to move in the next 6 months or positioning for 2026. I'm personally reviewing every download to send you market updates that could impact your specific situation and goals. Here's what I'm going to do. I'm giving this guide away completely free because I know that informed clients make better decisions and achieve better results. Alternatively, you can book a call for a free consultation with me via my Calendly link. We can tackle any area pertaining to mortgages and real estate. The information is in the bio below. Don't let this market opportunity pass you by. The conditions we have right now, lower prices, higher inventory, dropping rates, and actual negotiating power won't last forever. Take action now, and let's turn this market uncertainty into your biggest real estate win of 2025. Until then, stay savvy, stay informed, stay knowledgeable, and may your investments flourish and your dreams of home ownership become a reality. Catch you on the next one.